What's up, my fellow traders? Hope you all having an awesome weekend. So in this weekend's video, I want to give you a quick rundown that what to expect in the first part of the video, then the second part and the third part. Now, most of you skip the very important detail of the videos. That is why then I get lots of messages that Umar, you didn't say that, and then when they go back and see, and then they find out that they have skipped the important details. That is why if you want to learn something, or if you're looking at my analysis, very important you look at it without skipping. It's totally for your own benefit. If you skip it, you might miss a very single detail. So in the first part, I'm going to do the educational stuff where I'm going to show you the importance of risk to reward ratio. Either you need to go 1-to-1 or more than 1-to-1. I'm going to show you some live examples of trades which I've already took with way more than 1-to-1 and how I managed my trade and the benefits of that, and also the importance of going 1-to-1 risk to reward ratio as well. Then we're going to see how the price reacted from the zones. I'm not going to show you many zones because we do not have many zones reacted last week, but some of them has reacted. I'm going to show you them as well. What are the conferences I've looked and how we entered the trade. Now, this time we're going to do analysis of natural gas in correlation with ETFs, which is RITE, BOIL and gold, and see how they correlates with each other and how we can expect a next move out of natural gas and coal and boil, and how they goes opposite to each other and what to expect from both of them and the directions of them as well. So going to be a very important video, so make sure you don't skip a single second. Now we're going to do analysis of gold, silver and as usual crude oil. And then in the first part, I'm also going to talk about the mindset of some people. I won't say the traders, but some people out there who thinks that if you buy a trading course or if you learn from someone else, you cannot make money or you cannot become profitable. Now I'm going to talk about this in very detail because I'm going to tell you my own experience, how I become profitable and how a right education can make you professional and profitable trader. So going to be a very interesting video. If you watch it, I'm sure you're going to enjoy and you're going to learn lots of stuff in the first and second part of the video. Third part is going to be analysis as usual. So starting with a losing trade right here. Now I keep showing you winners and losers because then you understand in trading it's just all about winning. It's about losing as well, and if there is no loser, then you are just gambling. Now the first trade we took in the priority group right here, and that was a losing trade as you can see, but that doesn't stop me to enter another trade with the exact same condition which we had a pullback entry right here, because it is my tested strategy. Now if you're learning my rules, if you are my student, you know all the rules, everything you need to understand to become profitable and successful trader. But if you're someone who follow me on YouTube, make sure backtest whatever you learn here from my strategies and then gain confidence, and only then try to jump in the market with the hard-earned money. Now this was a losing trade right here, but did it scare me to take another trade? No, because I know it is my tested strategy. Exact same trade with the Canada Japanese yen right here that I took last week right here on 8th of March, and that was a winning trade. By the way, I managed this trade till the support right here, and that hit my take profit. Barely hit my take profit and then pushed back up. Now I'm going to talk about how to manage these trades in a second part, but I want to show you if you have one losing trade, that doesn't change your decision not to take another trade because you're scared. So exact same condition right here, a pullback entry below 50 EMA, and exact same condition, a pullback entry below 50 EMA. But one was a winner and one was a loser. Now I want to show you one trade right here, price is above 50 and 20 EMA, a bullish example, a losing trade of a pullback strategy bullish, price pushed lower. Did I get scared? No, of course not. I found another opportunity. Right here for Euro USD, we had another condition and that hit my take profit. Another pullback entry bullish right here, and that hit my take profit. You see, if you are consistent and taking the same entry, follow all your rules in that condition, you can make money. Doesn't matter if you are going 1-to-1 and more than 1-to-1. Now talking about risk to reward ratio. For the beginners, I always recommend going 1-to-1. And then once you are profitable, very important once you are profitable, because in 1-to-1 risk to reward ratio, the winning ratio will be greater. That will give you a confidence to enter the market, and once you are confident, once you are profitable, you know that you are making money, then you can tweak your risk to reward ratio and start managing it. And then if you have, let's say, 6 trades and you have 4 losing trades and 2 winning trades, you are still making money because you are trading with a better risk to reward ratio. Now I want to show you one trade that I personally took that was couple of months ago, and I've already shown you that trade while it was running, while I was in a profit couple of months ago. Feel free to check that video out. That was 6 months ago. Let me show you that as well quickly. Right, I took a screenshot out of this trade. Now if you see here, only with this small lot just made more than 1k right here, and this was a trade I've already shown you while it was running. If you want to investigate, feel free to go back on this date and check when I've shown this video when this trade was running live, and I've shown you the live account as well that day. Now why I managed this trade? Because I was profitable and because I've already seen a trending market. I knew that my strategies are working, and right here if you see a nice trending market, right, and right here when the zone was broken, right here I knew that I have an area from support to resistance right here, and then I found an entry condition right here. So I entered this trade here, and then I managed my trade till right here. I did not go all the way to support, but once I start seeing these wicks, I just decided to cut my profit and look for a next condition. But before that, before this big risk to reward ratio, I was profitable using 1-to-1. For a long time I was using 1-to-1, and when my mindset was strong enough to see myself in a break even, because there'll be at times when you are in a profit, when you push your stop loss to break even, when you're managing your trade, sometimes the price will just push back and put you out in a break even, and then you think, oh, I should have cut my profit, I should have even take some profit rather than zero profit. That is the mindset I want you guys to master. Once you see yourself in a winning streak on 1-to-1, then it will not hurt you if you see yourself coming out at a break even. Then you see this type of big opportunities, and then only then you manage your trades. Now how to manage your trades is totally up to you. You can normally manage it till the next level of resistance, or you can push your stop loss to break even and then manage your position all the way up to the level of resistance, which is something my students are learning in the full MMDA course, how to manage it. I have full chapter of the risk management there as well. If you're learning and if you're interested, feel free to check moneymarkers.uk premium plan. Now a good example of managing this trade. Now one more trade I want to show you right here. Now when I looked at a nice pullback entry but bearish right here, initially I went 1-to-1, and then I saw the price is pushing lower. Now at this point you might get scared when you see the price coming back near to your break even point, and in that case you exit. That is why I say for beginners, make sure you use 1-to-1, and then once you're profitable, manage these type of trades. Now example of going down in a trending market, as you can see the price just broke below the structure level, and then we had a pullback back to this level followed by bearish engulfer. In that case we have a condition, and then I managed my trade straight to the level of support right here below, which is a good level of support, and that gave me 177 pips take profit easily. And then what do we have now? This was a trade right here. I wanted to manage it till this low right here. I took this trade as well over the weekend. By the way, I did not take many trades because I was really sick last week. I'm still not feeling 100%. This was a trade I took right here. I entered. Now 1-to-1 could have been hit easily, but I managed it till this low right here, and that just put me out and cut me out at a break even. Now imagine when you see yourself in a big profit after a winning trade, you are happy, you are excited that you just recently have a winning trade, and you just want to make another winning trade and want to make money here. But when you see yourself coming out in break even, then you want to do revenge trading, even though you just made good money here. That is the mindset I want you guys to understand, and that could have been a winning trade if you have just gone 1-to-1. So two winning trade if you have gone 1-to-1 risk to reward ratio. But in this case I have one winning trade and one trade that put me out at a break even. But you see the benefit, I made money here equivalent of 3 1-to-1 trades, but I still made money. But again, if you go 1-to-1 and you see yourself in a winning streak, you become confident to take your trades. Once you're profitable, then start managing it. So a good example of that, importance of risk to reward ratio, because I get this question asked a lot, why you show 1-to-1 risk to reward ratio in your videos. The reason is that because in trading 80% is your mindset. If your mindset is not stronger, then you will not able to make money in the financial market. So first step is your trading psychology, then your strategy, then your risk management. You need to master all them to become a successful and profitable trader. Doesn't matter, it's a very low percentage of successful trader, but remember, there are those people who are making money in the market. It's a full-time business. For me, it's a full-time trading business. I do multiple stuff in trading. I invest in stocks, in crypto, and lots of other stuff. But for that, you need to become a profitable trader first. Now, talking about crypto right here. Now, a few videos before, as you can see a screenshot, I've already shown you my entry, which is right here. I've already shown you my live entry with my live account. Now you see the power of risk to reward ratio right here. That didn't hit my stop loss because that was not a leverage trading. That was just a spot investment, and that pushed the price up after a couple of weeks, maybe month. And then imagine how much money that would have made you. That was a very good investment here on the Shiba Inu coin, and that gave me a good money. And I was looking at the Bitcoin as well, the next level resistance as well. That is why I was confident the price is going to push up massively, and you see how nicely I made money right here. I exit my trades. I've already shown you that power of being patient and having a right amount of mindset. Now, talking about mindset. Now, if you see here, I got this comment, which is totally fine. You want to learn, you want to become profitable. That is totally cool. That is what I did as well when I started my journey in trading. Now, if you have a mindset something like this, then you won't be able to make money in the financial market. Now, for every single skill, you need to get a right education. Now, when I started out in trading, I was losing money as well. Of course, every single story is like this, that I lost money first and then I started making money, which is truth, because not many people want to learn and get a right education and then make your wish as your career. Not many people have a courage to do that. But if you have that courage, if you want to learn something, you need to get a right education. Now, imagine, let's take an example of a surgeon, a heart specialist. If you want to learn how to do a bypass, where would you go? You would go to a heart specialist, yeah, right? You would go to a professor, doctor who have performed these surgeries, who have done the bypass, and you're going to learn from him, right? He's going to come to the universities, he's going to take a fee from the universities, and you guys who are learning from this professor, you're going to pay him a heavy amount of fees because you are learning a skill that will give you a career. Now, if you ask, if this doctor is a big surgeon, now why don't you ask a question from this doctor, why the hell you are teaching the students in the universities if you're making enough money by doing a heart surgeries, you have your own clinics, you are making the money there, why the hell would you go in a classroom and teach the students there and then getting a fee? Because you're greedy? No, because it is a part of his business. He wants to make more doctors so that more doctors will produce and there'll be more people running his industry. Now, I've seen so many millionaires who make money and then they are selling the books. Why the hell they are selling the books if they are making enough money? Because it's their business. If you're learning a skill from them, they are going to charge you a fee, right? And if you have a mentor, trust me, your learning journey will cut down massively. So very important, if you want to learn a skill, you need to learn from someone who knows the stuff. Now, I have my students in my course, they are making money. Some of them are already making money. I've got lots of feedback. Feel free to check them out on my website. And if you think just by watching free videos, lots of free videos on the YouTube can make you a profitable trader, then trust me guys, you are wrong. Because to learn a proper skill, you need to have a proper set in stone rules. You need to have a proper structured build where you learn everything from basics to the advanced level, and everything has its own steps and its own level where you need to go through to get to the next level and gain that knowledge that you become a professional profitable trader, so that you can predict the market, you can teach people out there, you can invest in cryptos and stocks, you can do every single thing in your own field. So that is why if you want to learn the skill, of course, you need to have a mentor. If you choose me, you're more than welcome. If you choose someone else, go ahead, learn the skill. Make sure you know every single thing about the financial market if you're learning about trading before you invest your hard-earned money. Because it is not a joke, trading is not a fun, and when you lose money, trust me, it hurts. So let's wrap the first and second part of the video and start our analysis with natural gas, gold, silver, and crude oil, starting with natural gas, and I'm also going to go through ETFs as well. So first, I've clearly mentioned that if the price bounces from here, we're going to expect some pullback, and I'm not going to expect a big reversal. I'm only expect some bounce that is enough to hit your targets, and then we can get a possible push down to this level. Let's see what I've said in my last video so that you can understand conditions and entries. So again, it's going to be weak signal. It can still push up from here massively, or it can still push up, hit your take profit, and then come back in this rejection box and possibly push up, or come back in the lower level and possibly push up. So if you're taking this as an entry, stop loss can be 1 ATR, or you can also put your stop loss below this red box, take profit 1 to 1 initially and take it wherever you want to take it. But initially I will use 1 ATR and manage it. But on the safe side, keep your stop loss below this rejection box and go 1 to 1 initially. Here on Ovanda we have a valid condition right here, and I'm now expecting some bounce from here. Now remember, looking at this entry pattern, the bounce will be enough to hit your 1 ATR or 1 to 1 targets, and then it can likely reject and possibly push down to this rejection box and then form a double nice one. So how nicely the price action moves according to what we have predicted in a last video. With this push up right here, I've entered right here. The entry was a little bit low with this wick. The price just bounced up from here, and how much it bounced up? It bounced up easily to ATR. 1 ATR target would have been hit right here easily, but it pushed up to ATR. And what do we have after that? Like I mentioned, that we can get a possible rejection. If you are my student in MMTA course, you know that is a valid bearish pullback entry that follows all over rules. And with that, what do we have with this pullback entry bearish? The price nicely pushed down and hit more than 1 ATR. I kept a stop loss a little bit above this wick, and then the price pushes lower right here. Easily a buy, a profit from the buy and the profit from the sell. That is exactly how we predicted. Now, like I said, I want to see a push down to this level, this rejection box, to see a good push up from here, because then it will become a possible double bottom pattern. Now, looking at the fact on daily time frame, we are still above this rejection box of double bottom right here. That is why this is a zone I'm looking at for a massive bounce out of. But there are times when the price don't even make it to the zone, just start to push up and start to reverse from the upper level right here. This is the upper level of green zone from where the price is now pushing up. This level, in case you missed it, is right here in blue from where the price is pushing up. Now at this point I can see a formation of a double bottom pattern. Now that is a minor double bottom, because a major one is right here even on 4-hour time frame. If you see here, major double bottom will be if we have a complete push down to this rejection box right here. Now I'm also going to show you a weekly time frame. On weekly time frame, we have already hit a rejection box of double bottom. So that is why it is a likely chance that we can get a possible green candle, a weekly green candle. If that happens, if it closed next week as a weekly candle, in that case, we will have a major double bottom and price will start to reverse from here. That is why I'm also considering the upper level of a double bottom pattern. Now, that is a valid double bottom pattern according to my rule, very aggressive double bottom. So it's totally up to you. If you want to enter at this green candle, take your stop loss below this lower rejection box, take profit 1 to 1 initially and manage it wherever you want to manage your take profit. It's totally up to you. Now, if you want to be an extra cautious, then wait for a next candle as a red and then a bigger green candle. If we have that, then it will be a strong signal. Then this one still be a minor double bottom, but a strong signal that we can get a good bounce. That is enough to hit your targets. Very important. Profit taking is very important, but not taking your profits is as risky as not placing your stop loss. So we can get a possible bounce again from here. If we are broken above 50 EMA, in that case, we have a very likely chance that we have a continuation to push up to the next level of anchor level and the possible resistance, which I'm going to mention in my next video once we are completely broken above these two EMAs. So one entry is right here. We already have stop loss can be below. Again, take profit wherever you want to take it, 1 to 1 initially, or if you want to wait for the good entry, a red and a green candle, a bullish engulfer, or a good 382 candle will be your good strong entry. Again, 1 ATR initially, and then we can get a possible pullback. If we have a pullback to this rejection box, then it will be a very strong entry for someone not an aggressive trader. And if you say, okay, I will wait if the price will pull back and give me a push down to this yellow box right here, and only then I will look for bullish engulfers or a pin bar from here. In that case, it's totally up to you. But yes, then you might miss an entry, because then if the price will push up from here, you might miss it. But the benefit is that you will also be on a safe side if you want to enter from here. and let's see how the market opens. If it opens the gap below, then we will use this level as our next double bottom entry, or this whole zone will be my entry condition. Let's say if we have a price open below this rejection box, then I will still look for my buy trade. As long as we are inside this green box, we are still not bearish for natural gas, but we're still looking for short-term bearish trade. If we have a push down, broke below this low, I will look for another pullback entry bearish till we are in this green zone just for short term. Otherwise, for now, let's see how it opens. We have an entry condition and let's see how it goes. I've already given a condition for aggressive and non-aggressive entries for your next trade. And remember, this is just my opinion. Nothing should be taken as any sort of trading advice. Exactly same condition right here, bearish engulfer, and the green zone right here, which is 1.676, that goes down to 1.573, from where you can expect a good push up. Double bottom rejection box is right here in green here on Capital.com. Otherwise, wait and see how it goes from here, as we have a condition on Oanda. If the price pushes up from there, it can still push up here as well. But again, if you're not an aggressive trader, this zone will be your area to take your next buy trade here on Capital.com, or this rejection box for your double bottom entry. We are already in the rejection box on a weekly time frame. If you want to wait till next week and wait for the next green candle, then wait for that for next strong entry. On EMIX, right here, rejection box is right here, price pushed lower, and a green zone to take your next buy trade is right here if you are trading on this platform. So wait for that. Once we have a condition, I'll keep you informed if the price pushes down in this box. In that case, on Oanda, we will also inside the zone, and then we will have a better entry to take our next long trade. So keep an eye. The other condition now I'll be looking at for my next trades. For gold, we are nicely pushing down, heading towards a 50% retracement. As mentioned, it will be my limit order, a buy limit order for aggressive traders. Take profit 180 initially, and then manage it if you want to manage it till 280 or 1.618 retracement if you want to manage your trade. Otherwise, 1 or 2 ATR will be enough for you to take your profits. If you're not an aggressive trader, wait for the price to push down to 50 EMA forms a good bullish engulfing candle, and 1 ATR will be my target initially. Wait and see how we get a pullback. If we have a good pullback, 50%, then we have an aggressive entry. If we have a bullish engulfer above 50 EMA, then we have a non-aggressive entry to take your long trades. Otherwise, if you have a deep pullback, because silver is approaching a level of resistance, if you have a deep pullback to the anchor level here or to the anchor level here, in that case I'm expecting another bounce from here if we have no condition here and if we have not entered aggressively. Right here on silver is now about to hit a level of major resistance, 25.49, that goes into 26.04. If we have a push up followed by bearish engulfers, double top, inverted hammers, 382 candles bearish, in that case we'll have a sell signal and price will likely push down from here, and I will use 1 ATR or 1.421 till where I want to manage my trade. So I have these zones on the charts. Once we have a condition, we are good to go short from this area. We have crude oil broken above nicely. Now at this point we have a zone below 78.06 that goes up to 79.97. If we have a pullback to the zone followed by bullish engulfer, we have aggressive entry to take 180 will be my initial target. Otherwise, for the pullback entry, I want to see a break above this high with a pullback followed by bullish engulfer and keep on taking longs. So have these zones on your charts, have the green zone on your charts, and we're only going to look for buy trades till we are in the zone above, which I'm going to mention in my upcoming videos. So let's look at gold and oil right here. So at this point, looking at gold, that also correlates with natural gas. So at this point, if you remember, I've already mentioned this zone in my video. I'm going to put the link. Pushed up massively, broke above. Now it is a weekly level as well, and I'm not gonna look for sell trades at this point. I'm just looking for buy trades. Now by chance, if we have a deep pullback, I have the zone here to take my another long trade. Now I'm gonna put a card right up there. Feel free to check that video out where I've mentioned that the price can likely push up from this zone, and which it is now pushing up. So at this point, we can still see a price to push up right here till this high, and from where we can get a possible push down, maybe back to this anchor level or maybe back to this zone right here, 78.93, that goes to 87. If we have a push down here followed by bullish engulfer, then in that case the price will likely push up. Or if you have a dramatic push down without any condition, then this is an area from where I'm expecting a good push up. So for sell trades, I have a zone above which is right here, an only area from where I will look for a possible reversals and a push down. As this ETF correlates with natural gas, we can expect some push up, pull back, and in that process natural gas might come completely in the zone and start to push up, and here on the ETFs it will make a move towards a next level of anchor level before the price will push up and keep on correlates with each other. But for now, keep it simple. Have these zones on your charts for a possible push down, for a possible sell trade. Otherwise, we can expect a push up to this high and then a possible pullback to these anchor levels with condition. If we have a condition, we are good to go long on this ETF. Here on BOIL, we are still waiting on the price to come back in this anchor level for the possible pullback 23.95. That goes to 27.27. If we have a pullback to this anchor level, we have a very likely chance that price will then make another low and keep on pushing lower until it completely break above 20 and 50 EMA. So have this anchor level on charts. Once the price hit followed by bearish condition, in that case we are good to go short. If broken above 50 EMA without condition, in that case we are looking at the upside, the upper level, which is right here in blue. So that's it for commodities and ETF. Hope you got a value out of today's video. If yes, hit the like button for me, subscribe if you're new so that we can all trade together and trade efficiently. Hope you trade green rest of the week. Have an awesome weekend. Take care.